Welcome, everybody. Welcome to the latest Minds of Markets podcast. And this is absolutely one you want to listen to the end. This gentleman that we have as our guest today, Steven Sarge, Guilfoyle, everybody. He is president of Sarge 986 LLC, which is a family trading office, I think, since 2016. Like me at the SIBO, Sarge is an NYSE floor trader for over 30 years. We've never met in person. We've been on a lot of shows together. We've been interviewed at the same time together quite often, and I think we think very much alike because we have that floor trader mindset, which a lot of the investotainment people that are interviewed have never stepped foot on a trading floor, which we have. But I think that we have a very similar mindset. So, Sarge, welcome. Oh. Thank you so much for being here.
Thank you for having me, Scotty. As you mentioned, the trading floors, the New York Stock Exchange was a rough and tumble place. I think Chicago was a little more rough and tumble, but I do miss the open outcry market. I do believe that the ongoing two-sided auction was probably at a centralized location was probably the fairest market structure we've ever had.
Yeah. I couldn't agree with you more. And, when I'm down on the floor in the S&P 500 pit, which is still live trading now, it is price discovery. It is really an open outcry. It's an auction market. And especially for some of the bigger firms out there that want to get the absolute best pricing, not just send an electronic order, hitting bids, but taking offers, whatever it is, it truly still is the way to trade, to get the best pricing out there. Man, I miss it so much.
And you know what I love most of all? When probably in Chicago, but in New York, if you were just trying to peek at somebody else's order, you were breaking the rules. You probably could get hurt doing it, but you were breaking the rules. How come in this electronic market, which is supposed to simulate the old market, how come it's okay for algorithms to read each other's orders in the pipes and race each other to the point of sale? They're basically breaking the rules. Why is that nothing? Why does that not matter?
No, you're absolutely right. And the other thing also, which I explain to when I bring visitors down to the trading floor and they ask, why do we need this open outcry? Well, what happens when the hits the fan? Whether it was, big market sell-off at the beginning of COVID or a flash crash or whatever, people that are trading electronically or algos that are out there, if they don't want to participate, what do? They turn off their computers and they can walk away. Where if you're a live trader on the floor, you are required by the law, by the SEC, to uphold the markets that are down there to maintain a fair and orderly market. And in my estimation, that's why live trading will never 100% completely go away.
Yeah, I hope you're right, because in New York, although we do still have a few bodies on the floor, they're basically trading electronically, even though they're on the floor. They don't really need to be on the floor. I'm not at a competitive disadvantage when I stay out on Long Island and don't travel into the city. So that disappoints me as a big fan of human beings. That disappoints me.
Yeah, and you know what? In Chicago at the SIBO, S&P 500, VIX, Russell still trades live. There is still a mechanized component to it, a computerized component to it. But those three pits, for most people that don't understand it, are still extremely viable, can get extremely, extremely busy when markets are volatile. And boy, I wouldn't have it any other way, that's for sure.
Do you still use hand signals in Chicago?
Absolutely. There's no question about it yet. The S&P 500 pit has about 150 people standing down there trading live. So, the pit, what a trading pit is, and the S&P pit is probably 25 to 30 yards. It's big. So if you want to trade with someone across the pit, you got to use those hand signals. There's no question about it. Brings me back to some great times. There's no question about it. First, I want to hear about, a little bit about your military background, because I know, you are, you're such an advocate. And then B, how did you make the transition from, being a service member from that world into the world of finance? Because just last week I had on two of our employees, longtime employees who were both ex-Marines, who explained how they made their transition into the financial world. I want to see what yours was like.
Well, those guys are probably coming out of a more serious wartime than I had to come out of when I made the transition. I joined in the early '80s, and right out of high school. I didn't go straight to college. Back in my day, not everybody went straight to college, and in fact, I never met a person who went away to college until I was working on Wall Street. So it was a different time and a different place. So I joined the military straight out. By the time, a couple of years later, I just started really hanging around Wall Street. I knew I wanted to work on Wall Street because I had been trading since I was 13 years old. So I always had a retail trading account. My father helped me set one up when I was a kid.
Wow.
And, he taught me
So
really
so you would literally have to call your broker, right? There was no electronic trading back then.
Oh, yeah. I had to call my broker from a phone, and they had all day to get back to you with a price, and and I was using payphones half the time anyway. So
what are those? A lot of people listening to this may not even know.
Yeah, I had when I was a Lance Corporal, I had a colonel stop me on the sidewalk at Camp Lejeune one time because I was carrying the Wall Street Journal, and he said I wasn't in trouble, but he stopped me and he said, "What is that?" I said, "It's a Wall Street Journal, sir." He goes, "I don't think I've ever seen a Lance Corporal in the Marine Corps read the Wall Street Journal." I was like,
That's
"Okay,
awesome.
well, you have now."
That's awesome. That's awesome. So you always knew you wanted to be there. So when you finished your service, did you literally just walk into the NYSE and say, "Here I am, who's going to hire me?" Or what was your intro there to get on the floor?
Almost. I did get lucky, like so many people that worked on the floor, is that I was sending out resumes that they were all to financial firms. All the firms that had spots on the floor all worked in the lower New York area. And basically, I was very lucky that my father gave my resume to a guy who knew a guy. So I basically got my foot in the door because my father knew a guy who knew a guy.
And that's how pretty much all us old timers got in the business, right? You knew someone, or you knew someone who knew someone, and there were no formal interviews or anything, and kind of right place, right time.
And and having military on the resume, in my generation, not a whole ton of guys served. So having military on my resume really impressed the guys that were like 20 years older than me. So they gave me probably more of a chance to screw up than maybe they would have with other guys when I was starting out and making mistakes. So I got lucky.
You know what? But a lot of people, we hear that. I hear that all the time also. But when you're given an opportunity, though, maybe you're lucky that you had the opportunity, but it's what you do with it, right? I mean, you could have been lucky and just been a complete disaster. I could have been a complete disaster, and then story would have been over. But it's what you do with those opportunities. So I think, there's obviously a little bit of luck involved, but there's a lot of skill, a lot of determination, a lot of hard work and ethics that go with that as well. Yeah,
the hours that we put in as young traders, I don't think can be duplicated in the modern workplace. I mean, we're talking about 75-hour minimum weeks, sometimes over 100. I mean, and you had to put the time in because you had to learn it, and so much was done by hand then that it was labor intensive.
I was just going to say that, right? You couldn't just pull up your chart on your computer screen. You've got stacks and stacks of papers in your hand, and you're drawing your lines on a chart to figure out your levels, and absolutely.
Yeah. Graph paper, protractors,
So is that what got you? Was your trading career really technical from the get-go? Because I know now, following you, and anybody that doesn't follow Sarge, you really need to. And there's multiple places that you can, which we'll touch on in a little bit. But I know that, one of your mantras is removing the emotion out of the decision-making process and trusting the data.
Yeah, it's part of it, but I'm a three-pronged assault on the market. Okay, I'm economic, I'm technical, and I'm fundamental, and I try to marry all three. You can't always marry all three, but I try to marry all three. I like to be in stocks that produce cash flow, positive operating and free cash flows. I like to be stocks where I see a technical setup, and I like to, if possible, front run the economic environment through the lens of monetary and fiscal policy.
You hear that, regulators out there? Front run, but it's not the bad front run.
No. But that's basically. I went to school. I went to night school while I was working on the floor of the exchange, and I went to a school that was 10 minutes away from the exchange. So I got a degree in economics. That's how I got involved in economics. That's how it became like maybe my first love. And fundamentals, my father taught me when I was a kid because he was a fundamental trader. He still is. I shouldn't say was. Knock wood. But he's alive and kicking and still trading down in Florida. So he taught me most of the fundamentals, and I learned the technicals on Wall Street. I learned it way before they called anybody a CMT. I mean, back then it was like, look at that nut. He thinks he's looking at charts. It's voodoo. They thought it was voodoo back then.
It's really funny because when I was a trader on the floor for a long, long time, even when I traded for Goldman in the S&P 500, technicals didn't mean as much to me as they do now because we were trading the order flow, right? We were trading what would come into us, and we were buying buying the orders being sold, and we were selling the orders that people wanted to buy. But now, ever since leaving the floor, the technical side, at least for me, has taken over. And you've got to understand those charts.
It's also because technicals are more accurate now than they have ever been because humans are doing less and less of the trading than they ever did. So in our days, there were still two guys that were going to be angry at each other, and one of them's going to make a stupid decision and dislocate a market, always. But nowadays, everything's run through algorithms, and the guys who write the algorithms they hired guys like us who got laid off but could read charts. They hired those kind of guys to read their charts for them. So we all know the same technicals, basically. Yeah. And, some guys are better at spotting patterns than others, but we all have the basic education. And so a lot of the levels become self-reinforcing because most of the guys know how to read the charts the same way.
Yeah, that's for anybody out there that doesn't believe in technicals. I'm not saying it's the end all be all, but you really should dive into it because it'll definitely help your trading. Speaking of trading, I'm going to bring up a chart here because I've been following you. I believe this is since May 24th, if I am not mistaken here. And tell me what chart that is. Can you see it?
What do we have? Can't see it that great. I can't see when I spiked.
Well, here's where you got in. And I know you were even out there pounding the table on it this morning. Palantir.
Oh, Palantir.
What did you see?
Oh,
this is. I know. What did you see right here when this thing was trading? It was like 20 and a half, 21, right in that area when you really started pounding the table on this thing back in late May. So talk about reading the charts. What did you see there?
It was really oversold at that point. I had been in the stock before that. My target price was 27 originally, and actually kissed 27 and came back in. I've been in the stock in one way or another since it was trading at about $6 or $7. So I've been in the stock almost since the beginning of time, since the beginning of its time. I believe that the stock is, yes, it's overvalued by traditional metrics, but I do believe that's probably based on a forward-looking margin. I understand how much the military depends on it. I understand how much the federal government depends on it. They are growing their commercial customer base through these things called boot camps, which are not like ordinary sales methods of sale. They're really more like where they let them try it out and they show them how, and then they tell them, okay, go find something similar. And there is really nothing similar, nothing competitive just yet. This guy, Alex Karp, he also inspires confidence because he's such an eccentric. He's so smart that he knows exactly what to say. He knows how to challenge. And I really think that as long as he's at the top and as long as they don't lose the U.S. government and other governments as clients, I think they'll continue to grow and they'll continue to pick up commercial business. Where does this stock go? I don't know. I have fantasies of this being, one of the Magnificent Eight one day. I mean, yeah. But in the meantime, I have a core position. It's been it was in a stocks under 10 portfolio that I used to run for the street back when that was a thing. So I've had it since it was much cheaper. It's been in my own portfolio since I was allowed to own it, which was about a net basis of around 16. And this is a stock that I truly believe in. It's a top 10 holding of mine in terms of weighting. And I trade around it with a small portion, and I'm invested for the long term with the majority of it.
Well, with a net basis of 16, you're up 75%. So I'd say
Yeah.
that's a home run.
My target price is currently 32.
All right, that's not that far away. Can I ask you about one more that I read some commentary that you had this morning, and that was in NOW, Service Now, which I've loved this stock forever. And I know it got a downgrade today. It got a downgrade ahead. Someone said, I don't remember who it was, good time to sell it before earnings, which are a few weeks away. Stock is down, 5% or so, which is a pretty significant move. But I read a piece on yours this morning that said could be some opportunity here. So again, looking at the charts, not just saying, okay, the stock's down 4 or 5%, looking at the charts, what do you see right there that says there could be some opportunity?
I just see, well, if I'm seeing it the right, let me see, look at it on my chart.
Yeah, look at it on yours. Our viewers will see this one. Yours probably not showing up so well for you.
Okay, this is the inverted ascending triangle that I spoke of this morning, and this basically is a bullish reversal pattern most of the time. Maybe 3/4 of the time it works. Maybe it doesn't. The pivot right now is 815. I added to it this morning at 768. I was already long the name. I sold some a while back, about a month ago, a little less than a month ago. I'm trying to buy it back. I'm actually paying a little more than I sold it at, so that wasn't great trading. But I like being in this name, not necessarily around earnings because it tends to be inconsistent around earnings. But this guy, Bill McDermott, the guy that runs the company, if you followed his career, he's worked wonders now at ServiceNow, although that was a pretty big, cloud company before he got there in 2019. But I think he increased the market cap of SAP maybe fivefold while he was running that company, and he goes back to Xerox back when that was a real company. So this guy's probably one of the top 7 or 8 CEOs, in American business. And even when they take their lumps, this stock always seems, knock wood, it always seems like it makes a nice comeback. I will.
Go ahead. I'm sorry.
I was going to say I will panic a little if it cracks a 50-day SMA. Then maybe I'll take this off and accept defeat on that small trade.
He's one of the CEOs I absolutely love watching. After earnings come out, he's always interviewed. He's got the hair, he's got the glasses.
Yeah. But that's due to an injury. He hurt his eyes.
But you can you close your eyes and listen to him, and boy, is this guy smart. I love listening to him.
Yeah, he's smart, and he's a friend of Kramer's, so he gets on TV a lot. I'll say him, Jensen Huang, Lisa Su, Alex Karp, I just mentioned. There's a handful of these CEOs that just make my, they're the ones I always make sure I listen to the call. I always make sure I know what they're thinking, because these are the stocks that have made me money consistently, like not just regular money, but these are the stocks that have made me good money. And these are the CEOs that have been behind those stocks. So even if they went to another company, I would follow them to another company.
Yeah. Oh, that's awesome. Now, besides your military time, okay, one thing that, and I follow you on social media, how do you get a membership into the Saturday morning workout club? It's like working out old time, like with Rocky, right? For those of you that don't know, it's like literally he goes into his garage. He's got everything all over the place. Your weights are probably 40 years old. I don't know, but the only thing I don't see you doing is chugging down the raw eggs.
Yeah. No, you just got to tweet. That's all. Everybody's welcome to join the Saturday morning workout club. It's hard all week, I think, to get your workouts in. You have to. My first digit starts with a 6 now, so I'm getting up there. And during the week, it's so hard to squeeze in a little cardio, to squeeze in a little weight resistance. But on Saturday mornings, before the bride wakes up, I got maybe 2.5 hours where I can work out without interruption. And so that's my time. And I really try to go at it like a much younger man on Saturday mornings.
Well, you're a great example for those of us that want to do that always say we want to do that. But you're right. It is difficult to find the time, and it is so important, especially in what we do. It's a great way to let go of some of that tension that builds up.
Yeah, and those weights are a good part of those weights are about 40, 45 years old. So
I don't doubt it. So now let's get down to the nitty gritty. Where can everybody find you that has not followed you before? And there probably aren't a lot of people here that have not followed you. Where's the best place to see you?
Okay. Well, on Twitter, I'm Sarge986. You can read what I write. I write 2 to 3 articles a day for the Street Pro. It used to be called Real Money Pro. Now it's the Street Pro, which is it's the pay version of the Street. The Street is a free vehicle on the internet. The Pro is a subscription vehicle. So a bunch of other, like Doug Cash is on there with me. Chris Versace is on there with me. Bob Lang is on there. There's a handful of traders that you probably have heard of that write for the Street Pro, and it's a pretty, I wouldn't say it's an elite publication, but I think it's probably up there. You're going to find what you need there. You're going to find technical analysts. You're going to find economists. You're going to find fundamental guys, and you can find a guy like me who's kind of a hybrid of all trading disciplines.
Jack of all trades and master of all of them.
I don't know about that.
Listen, I don't want to take up any more of your time. I truly appreciate it. This is like a big honor for me to have you on, especially since we have never met in person, but we've always been on the screen side by side on an interview so many times.
You and I have been on Liz Clayman's show together probably 70 times.
I know. I know. One of these times when I'm out in New York and doing something live out there, we got to hit up and have a beverage together.
Sure, you bet.
All right, thank you so much. I really appreciate it, Sarge. You're a great mentor to a lot of people. So thank you so much.
Thank you for having me.
All right, have a great one, everybody. That is our latest Minds of Market podcast. We will see you on the next one.
The Minds of Markets podcast is an exploration, a deep dive into the minds of some of the best traders and investors in the market. Our goal is to help you, the listener, learn from some of the best out there to improve your knowledge and skill set as a trader or investor. The Minds of Markets podcast should be used for information and entertainment purposes only. The opinions expressed in this podcast are our opinions only, and none of the information contained in this podcast constitutes a recommendation that any particular security, portfolio of security, transaction, or investment strategy is suitable for any specific person. Trading is risky, and past performance is not a guarantee of future results.